The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have Norm Winsky on at the half-hour break. He's got some good information, as you know. He's been spot on, so we'll have to listen to Norm at 9:30. But the first chart that I wanted to post in here is one that Shane Smolian, who was our guest yesterday from wolftrader.net, gave us way back in December. And it is basically a lunar cycle of the euro. And I keep these because I want to see, how accurate they are. And I watch them and don't always trade against them or with them. But I do want to see what's happening because the more information you have, the better you are. Because I do like cycles. And, of course, I certainly like patterns. And we've got a lot of those. But I want you to take a look at that red arrow from the 20th of January. Remember, that was a big day we had in the market when we spiked down to 1804 in the S&P. And as you can see, we rallied up into February 1st. Well, this is the 4th today. This is actually the birth date of Ronald Reagan. And anyway, look at this chart. You'll see that red arrow there. Now, what I'm going to do now is I'm going to update the chart just by looking at what happened on January 20th, to where we are right now. So there's got to be something in these lunar cycles, because you just can't make a prediction like that far in advance without having something there that looks interesting. Now, what we'll have to do now is we have to follow it. What's interesting now is we trade the euro. When I posted this chart this morning, we were trading at 112.40. 112.60 is the 61% retracement of that whole move down from 117. If we get above that, folks, there's a danger of we could be looking at some real serious type things like a currency war or something like that. But we've had incredible swings this morning, folks, while we were sleeping, and the people in London were certainly awake. But we've had a 450-point swing in the British pound today. We had 150 points up, 150 points down, that's 300, and another 150 points up, that's 450, and now it's backed off another. So we've had a 550-point swing in the British pound. So sometime today we might get some type of a big reversal in these currencies, and maybe the dollar will find some legs in here. So that's it. Now, the first question that we've had this morning was yesterday when we were talking, when I was on the air, just as we started our program. I said that the E-mini S&P was making some really strong resistance at the 1910 level. And if you'll notice on this chart, it's just a 4-minute chart, which I use for short-term charts, and the reason why I do it is because the Earth rotates 1 degree every 4 minutes, and sometimes, when you're looking at an aspect happening during the day, you want to see what that exact time is, and within 4 minutes. But if you'll notice, you'll see the butterfly pattern that's formed there, where you have the ABCD coming in at 1910. The high was 1910.50, and then we dropped, as you can see, we dropped 40 handles, and then we rallied up and we made a perfect ABCD pattern at 1892, up 30 handles, then down another 20 handles. You'll know we stopped right at that 61% retracement at 1874. And what did we do after that? We went straight up 50 handles all the way to 1922. And those of you that like Fibonacci numbers, 1922 was the exact, to the tick, 786 retracement of the high we made from way back in 1954. So we are now looking at some a pullback here. We should hold the 18. I believe it's the 1886 level in the area, but that's about it, folks. I don't trade off of a 4-minute chart. I bring that up just to show you, the swings, because we're having such volatile swings. Usually, we had a 20-point swing average in the S&P for months and months and months, and now, we're seeing that even more crazy. So we'll be watching it. Now, I noticed today on the tube. Oh, we got to talk about gold and silver. I'm not going to talk about Tesla now because, the only people I know that drive those cars are the O'Briens, and I don't know if they even talk about that on the air, and I'm just joking about that anyway. Let's talk about the precious metals, because we have had a run here now. We broke above the 1130 level. I didn't think it was going to get there, and we'll see. Someone asked me the question. I use 15-minute charts is what I like. I like 15-minute charts. That way you don't have to stare at the machine all the time. But let's take a look here at gold. As you'll notice up here, we are hitting a 20-minute line here in just a few minutes. In fact, we came with just in a dollar or two of it. The 786 retracement comes in at the 1160 area. And we're having an equal move like we had from July to October. What's interesting is if we look at that ABCD structure that we have listed here on the blue line here, if you'll count the number of days from December 20th up to the B point, and then from January the 20th up to where we are now, that's 16 trading days. So we have 16 trading days up in the AB leg and 16 trading days up in the CD leg. And everybody's getting bullish now. And folks, this is still this. I know it's hard to believe, but it's still in a downtrend. But I'm very bullish gold. There's nobody more bullish than a sold-out bull, believe me, because I really thought that 1130 was going to hold it, and now we're $20, $25 above it. So it looks like we're going to, make that easily at the 786. Now the silver market has been lagging behind badly, but it's going to have some resistance up at the 61% retracement, whereas gold is 786. Silver is going to be at the 61% retracement at $15 an ounce, and we're still a little ways from that happening so far, because we're trading around the 1480 and change level. So that's how we see the move transpiring right here, folks. When you look at these markets, they run up fast and they give up fast, and if it was really good, there should be some buying coming in here to try to tell us that this is what we're looking at. But let's just wait and see. Now I wanted to talk a little bit about market symmetry, because we have a beautiful symmetry in one of the largest markets in the world, which is the corn market. This is a 4-hour chart in corn going back the last 6 months. As you can see, the 3 drive to a top pattern that we had back in October. The market then dropped 50 cents a bushel in a beautiful ABCD pattern to the downside, making a beautiful move here, and then we've rallied up about 20 cents a bushel. But look at what we have going on right now. We have a 786 retracement here. We have equal rallies. So I'm going to take a little break here. 877-927-6648, and we'll get back to the currencies.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and questions are coming in so fast I can't handle them. But I posted the chart of the Canadian dollar versus the U.S. dollar to show you how wild it is, and then also with the euro versus the U.S. dollar. It's just, when I've already mentioned the pound having a 500-point swing already today, so we're having some really wild swings in the currencies, and of course they control the markets. That's where the real money is. We're going to move on to oil here because we only got about another 10 minutes before we have Norm Winsky on, and I wanted to show you the oil chart. This is a 15-minute chart of April crude, and as you can see, a couple of days ago, we hit that $36 a barrel level. We went from 28 and change to 36 and change, and then we've had the back off yesterday, and then we had a pretty good run up where we rallied $2 a barrel. The market actually yesterday made a top up around the exact 60, well, it went to the exact 61% retracement in the April crude at 34 and change, and then it's backed off a little bit from that point. So it's trying to make a bottom in here, but it hasn't. The good part about this is the fact that the oil inventories numbers were so bearish yesterday that it even shocked the professionals in the business, and yet the market backed off just a little bit and then exploded to the upside by about $1.50 to $2 a barrel. That's a sign of a market that is the shorts are getting a little scared, because when you have really bearish news and the market doesn't drop, that's a bad sign, because the slightest bullish news will put the thing into an orbit. So just keep in mind that that's what you have to be looking at. Now, I know we've got a little bit more time here, but I wanted to talk a little bit more about the stock market here, because yesterday when we were having these moves, you'll see that we had a beautiful 61% retracement in the NASDAQ chart. And last night, of course, we rallied 100 handles, and now we're giving, about 61% of that back already. And if we get back below that 4070 level in the NASDAQ, we're going to be looking at something pretty serious, because we have some really positive cycles coming due now between now and Monday. And Monday we have, of course, the new moon. It's the Chinese New Year. And that's also a really key date that Shane told us about from the Planetary Speed Index. But as you remember from his talk, it really showed that the overall negativity that we have facing us potentially here over this next 18 months. That's the main thing. Now, we looked at I want to do one other thing to toot his horn a little bit, because he does such great work. And I want you to take a look here at the soybean chart on the lunar cycle. These are short-term cycles on lunar cycles is what they are. But as you can see, from January 20th to February 1st, if you go back and look at your bean chart, we had a pretty nice bottom. This is actually the second. Yesterday we came in and made a nice little Gartley pattern down there exactly on the exact time within 12 hours. So it was pretty much spot on. So these cycles don't work all the time, but they work some of the time, and that's what you want to be looking at. The main thing that you want to do is you want to be able to say, hey, when is this cycle not working? And that's the bottom line. If you remember that gold cycle that we had from Larry Edelson, said gold should have topped around January the 29th, and in fact it did not. It just kept going and going and going, and that tells you that we're usually continuing on to the upside. So we'll see what the flavor of the month is going to be. The ideal situation. There we go. We got oil moving pretty good. We rallied $1 a barrel since I've been on the air. Well, that's a good sign. Okay. Let's see how we're doing in the gold. How high did we get? We got up to 56. Watch gold at 1160, folks, because that's the 786 retracement of the whole move down. And I'm bullish, but if you want to give your money away, buy after it's been up 16 trading days. That's the best way to do it. Now, maybe it'll go 18 or 25 or 50 days. I don't know, but that's not a very, very smart thing to do. We are $25 higher than this old sold-out puppy and that was, of course, John Logan's fault. No, I'm just teasing, because you have to take responsibility. He blames me for everything, but I blame him for nothing. That's just the type of person that I am. That's a joke. I better stop taking medication here. That's the bad part. When you get old, you do have to take medication. But the crude oil is really starting to get some legs under it. And if you'll remember, I remember this very vividly, because John was telling us that John Logan was telling us that there was some really good fair value showing up in the crude oil. He said, I can't say to give a roaring buy signal, but that's what he looked at, and I think that's true. And he said the same thing in the S&P, and look what happened with that. So this profile that he's looking at certainly has something to hold your technical analysis up to it also. So we'll keep an eye on that. Silver's still lagging badly, of course, but we'll wait and see. Now, the key level that I'm watching today in the S&P, remember the 786 retracement of the last several days range came in last night at 1922. And then we backed off all the way down. We dropped 25 handles. The 61% retracement of that move comes in at 1886. Below 1870, folks, I don't want to think about what's going to happen on Monday, because this thing is, all these markets are just giving it back too fast. I mean, they make it real quick and then they give it back. And I'm not just talking about the U.S. I'm talking about the German DAX. I mean, the German DAX has been just incredibly weak. And if you'll remember, we've been talking about Deutsche Bank, the largest bank in Europe, this flagship of Germany, and that stock is trading under $15 now. And you do remember when we put that chart up, we said anything under 22, it was going to be a mirror image, or a likeness of what happened to Lehman Brothers, which was the largest bankruptcy that we had ever have. Oh, one other thing on a fun note, I happened to be watching Charlie Rose last night. I like to see who his guests are, and it was none other than Mike Milken. And of course, Mike is in the medical field now, helping everyone after he beat his cancer, and he really had some interesting things to say about how computers are so useful, in attacking some of these things. But it was he looks exactly the same that he did 35 years ago when I knew him. So it's it's been 40 years. Are you kidding me? I started in Drexel in January of '76. Shut the front door and raise the rent. Wow, where does the time go? And one other quick question. I've said this before. I was in China giving a speech when Ronald Reagan passed away. And he was a big friend of the premier at the time. And what they did was on Embassy Row, which is where all the big traders used to live, they took them away from them and gave it to the embassies. And it's a beautiful place. And all the flags were at half staff except France. And so China just turned off the electricity and the water until the flag came down to half staff. So we had to respect that. Anyway, we'll take a little break here. I'm going to have Norm Winsky on at the break.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, looking good, Billy Ray. Feeling good, Lewis. We have, I believe, Norm Winsky from Astro Trends on the line. Norm, are you there?
Yes, sir, Larry. Can you hear me okay?
I hear you like you were sitting right next to me here in Terre Haute, Indiana. Norm and I are both from Terre Haute. Hey, Norm.
You're not in Terre Haute, are you?
No. I'm in Tucson, but we could be with the way things travel. We could have had a plane or a train or automobile. We could have made it.
There you go.
Hey, listen.
It's a great place to relax while waiting to cross the railroad tracks, right?
There's a long story behind that. Sometime I'll tell you about it. On page 1, we're going to start out here on February 4th, and I want you to, we're going to do, when you're ready to move to page 2, if you'll let me know, I will post it, and then at the very end we have your final page there. So we've got 6 pages to cover, so fire away.
Yes, sir. Okay, I'm just going to do my usual recap there. When I was on early January, I was looking on the stock market. We had some big things happening. I was looking for primary forecast was for initially down. I thought it would be somewhat similar to what December did, and when we had a sharp down in the early part of the month. And then I thought about mid-month that we might make a low, but I was a little bit off on that. We continued lower for a while until the 20th, and then we came back and we kind of the train got back on the tracks toward the end of the month. My key dates here, I have 2 sets of key dates. One is based on the planetary astro key dates, and the other I have some Fibonacci models. If the folks take my class, they can learn learn advanced Fibonacci Lucas mathematics and how I create these models. So the bottom line is, where's my results here? We have these dates here. I'm going to scroll down now. And here's how I score these. I mark them on the S&P chart there. Larry, you might know this guy. He just got in the stocks not too long ago. I'm on page 2 now, Larry. Sorry about that.
Yes, sir. Okay, it's coming. It's coming. It just takes me a little while to get it up here, my friend. So,
okay.
Hold on just a minute. There we go. Here she comes. Fire away. Who was it, Norm? I didn't hear the name.
Oh, on the chart there, on my S&P chart there. You might know that guy. He just got in the stocks, right? You know. So it's kind of a joke. Never mind.
Oh, I see the little guy that looks like me carrying the low, setting in that.
He's in stocks. In stocks.
Oh, the stock. Oh, you're such a player. You and Rodney Dangerfield. Let's stick to commodities.
All right. Anyway, so the Astro dates, I hit 5 out of 7. That was 71.42%. On my Fibonacci dates, I hit 4 out of 4 for 100%. Don't expect that every month, you know. And we have a total average of 81.81% on our batting average. Moving ahead, I basically emphasized 2 markets when I was on your show in early January. Stock market and soybeans. I said I thought that the grains could be making lows there, and there was particularly in the planets an emphasis seemingly on the soybeans, that we could be making a low there in early January. Here's if you scroll down on page 2, you'll see the soybean chart, and you can see how they did make a low in early January and had a decent move up. I think you were talking about that earlier in your show, right?
Yes. Could we? We've had a question about your Super Bowl. Who do you think is going to win the Super Bowl? And
I'm going to be talking about that. That's in my notes. If you scanned ahead there, Larry. So we're going to be getting to that in just a minute. Okay.
I can't wait, Norm. Okay, I'll wait. Go ahead.
All right. So here's their soybeans, and you were talking about those a few minutes ago, and we made a low and moved up. Now we're moving ahead to page 3. This is going to be approaching what you just brought up. And so every February, I have my February forecast for FunFest, where I roll out the different forecasting models for the year. One, I look at just for fun, I look at the Chinese zodiac, the Chinese calendar. They have the Chinese astrology. I really don't know that much about it. I go and look up, find somebody on the internet with an opinion on what the coming year might be, and so what the track record is on the Chinese astrology is that they've been perfectly wrong the last several years. So if you just flip everything they said upside down,
It's a very valuable thing.
Yeah, exactly. There's nothing, you know what, Larry, in my experience, the only thing better than a hot trader, a really hot model, maybe they can be 90% of the time for a while. The best thing I ever saw on the trading floor was the people that we called the reverse barometers. These people could be wrong 100% of the time.
That's from the book, if you remember the book, Reminiscence of a Stock Operator, the guy called Old Westlake. And Livermore said, he says, why do you keep listening to this guy? The guy said to Livermore, said, are you kidding me? He said, the guy is wrong all the time. And he said,
right.
Why do you listen? Yeah, and he says, why do you listen to me? I says, what do you think I'm doing? He's doing
so, for example, last year, 2015, they had the wood goat, and they said it was a fire year, and so that was optimistic. And they said that it would be a steady year with an upward bias, and steady prosperity. And as you know, here the chart was wild and whippy with the downward, ended up on the downside.
That's for sure.
So there's three things I look at for the big models here. We have, like I mentioned, the Chinese. We have the January barometer, which you probably have talked about. As January goes, so goes the year. That model there has about a 75% track record since about 1950. If the January is down, then the stock market will usually close down for the year. And if the January closes up, then you usually get an up year. Now, what I've tied together here in the last couple of years, amazingly, I didn't ever think this was possible. I've noticed that if and there's also the Super Bowl indicator, which is, I just looked that up the other day, is at 82% track record since the beginning of the Super Bowl. There's a Wall Street Journal article on the internet there about Robert Stovall is kind of the keeper of the Super Bowl. The guy's almost about 90 years old now, But anyway, so that's been working about 82% of the time. And so I always like to take things another step. For example, take the January barometer, and you look at the price action during January, and this has a good track record of forecasting the ups and downs during the year. January is like a fractal for the entire year. And so I got that idea. Maybe the Super Bowl could do that too. And here, if you scroll down, I'm on page 3 now, Larry. So if you scroll down to where the chart is, you'll see if you track the scoring pattern of the last Super Bowl, it did a pretty good job of forecasting the general trend for the stock market for 2015.
Well, it sure did. That's for sure.
Yeah. Now if you start thinking about
what we want to hear.
So if both of these things can forecast the market for the year, perhaps January, I'm working on this. This is an experiment. Perhaps January's stock market action can predict how the Super Bowl is going to come out. Right? So if you know the Super Bowl indicator, you have the NFC teams, you have your AFC teams. NFC teams are usually the Bulls, for predicting an up year, and the AFC teams are the Bears predicting a down year. Whoever wins indicates how the market's going to come out for the year. So if we get a big down January like we did, that would be indicative of the AFC team winning, which would be, I think, would be an upset this year, because I think the Carolina Panthers are pretty heavily favored. Is that what your take is on it, Larry?
Well, that's the problem. Is they're not heavily favored. It's a 5.5 point spread, and when you look at Carolina, they've only lost one game, and what they're basing this on is the Denver defense. And I don't know, Dad. I know less about that kind of stuff than I do anything else. So I should just shut up. Let's take a break here. Pace and Bill, stay with us, Norm. Okay?
Yes, sir.
Please.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back with Norm Winsky from Astro Trends. Norm, I have a question.
Yes, sir.
I met at one of the conferences we had in Chicago way back in the early '80s. Joyce Werman, was that her name? That did
she was
the
Astro gambling lady. Yep.
Yeah, my friend Arch Crawford still uses that whenever he goes to Las Vegas. And the last time he went, he picked up like $7,500 playing a slot machine for 5 minutes. I've never used anything like that, but have you had any experience? And tell the folks what that's about.
Well, that she has a book. I think you can buy her book, and I never did it that way. I once in a blue moon, when we get down around to the horse racing season there in the May-June period, it's
Sure.
fun to watch the Triple Crown, and in later in the last 5-10 years with the internet, you are actually able to get the birthdays for the horses. So I usually do it that way.
I'll be darned.
I've had some pretty good success with that. But
you
I'd
have
like to
success.
I'd like
you
to
have
keep
success
moving
at
on with this, Larry, if you don't mind.
Okay, I'll be sorry. Now you go ahead and whatever. We're on page 5 now.
We're on page 3. So I'm just going to recap now. So just to tell you the value of this forecasting model, these forecasting models. You may remember in the late summer there, July, August period, there were many forecasts floating around in the trading community that the world was coming to an end, economic collapse, and this model said, contradicted that and said, no, the market's going to make a low about September and start moving up till December, and that's what it did in the face of these dire forecasts.
Mm-hmm.
So that was pretty good. Now we're moving ahead to page 4, Larry.
We're on there.
All right, so here we go. So we got as we mentioned briefly before, Super Bowl's coming up. We got Denver's the AFC team. You got Carolina NFC team. The stock market indication, if there's any connection between these two indicators, would say that not only should Denver win, but it might. I'm going to be tracking this to see the scoring pattern should be that the Denver should dominate the first about the first first 3 quarters of the game, then Carolina would have a rally, but it won't be enough to win, because that's what the market did in January, right?
Mm-hmm.
Coming up here's your coming events, planetary-wise. We have the biggest planetary event. Oh yeah, I'm going to get to that. Okay, biggest planetary event coming up here next week, Tuesday night. Saturn is going to align with Pluto. We had that in late August when we had that mini crash into August 24th. We had a similar aspect then. I think we also had something similar to that in early December when we made a high to the day on Pearl Harbor high there on December 7th. And so this has been a very good, very reliable planetary pattern. Mm-hmm. And so the markets to watch at that time will be coffee. It's a double hitter for coffee with both Saturn and Pluto and Capricorn. And also you want to keep your eye on the cocoa, hogs, oats, stocks, and T-bonds. So those are the markets we're going to watch for that. Coming up right around Tuesday next week. It's going to be exact Tuesday night. And so
Norm, I would like to know on that Tuesday night, because you nailed the high in the market on May 19th when we had Mercury going retrograde and the new moon, and we have a new moon with the Chinese New Year coming in Monday. What is the exact time on Tuesday where this aspect of Saturn Pluto hits? Can you tell us so that we can, put your feet to the fire?
I'd have to look it up.
You'll let me know, right?
But I think it's roughly about 10 o'clock at night. If a educated guesstimate is good enough, then we're good to go.
Good, we're done. 10 o'clock on Tuesday night. We'll hold you to that.
All right.
Go ahead, my friend.
Right. So anyway, and then moving on, we have a few other things with a lot of stuff with the U.S. The general, sort of regular planetary picture is, other than that, is kind of quiet for the middle of the month. We get mostly dominated by the U.S. financials, so watch the U.S. financials after that, and that's pretty much it. And then we're going to move ahead. Here's the stock market I'm on page 5 now, Larry.
Okay, we're there.
Yep. And in my letter there, I did some calculations actually related to that May 19th top, where I was doing some Fibonacci and Gann calculations. Came to that date there with the new moon, Mercury retrograde. I was monitoring since several months before a Gann pattern where it's called a 1 by 1, where you move your line up $1 per day. And so from the March 6th 09 low, I did a Fibonacci projection and got 2138, which was my target price. And I ideally, under the Gann model there, we should have got there on January the 12th, but we didn't do that. So we continued. We never got to that price, and then we continued to make marginally higher highs until we got to the May 19th, May 20th window, at which time we got to 2137.10 on the cash S&P overnight. And so it was off by about 130 days. So doing the technical pattern thing where you flip your pattern over, where you get a breakout, that's kind of was a time breakout, not a price breakout. I flipped out 130 days into the future, landed on Sunday, September the 27th, which you may remember was a super moon lunar eclipse that only occurs about once in 20 years. And I know that the lunar eclipse is, the stock market does not like lunar eclipses. And so the next day on Monday, we were down over 300 points. So now I gone another 130-day cycle, which lands us right today, right around the 4th to the 5th of February. So also my Fibonacci models, I have 4 Fibonacci models, and 3 of them lined up pointing to today. So within a day or so now, we should be looking at some kind of important turn in the stock market. Here's your S&P chart here, lower on the page. Okay, and you can see the problem is we're kind of in the middle here. I don't know what you think, but
we certainly are.
Yeah, we're kind of in Midland here. We're not at an extreme, so that's a problem, because you can't use this stuff blindly. You have to look at the setup of the market. We'd like to see the market get to some sort of extreme, and so we need to see that here in the next day or so for this probably to be effective, Moving ahead, now we're in the freebie section here. I'm moving to page 6 where you can tell the folks how to get all that great free stuff. You can get my letter for free for a month. You get the free class. I have a 3-hour class where we go through the letter and learn all the different techniques I use in the letter. We got the Astro, the advanced Fibonacci Lucas numbers, fractals, all kinds of things. The February is maybe if you had to pick a month, probably the best month of the year, because I do all these forecasting models with the Chinese, the Super Bowl, and the January Barometer and the January Fractal. And so it's all free with the money-back guarantee, Larry.
Money-back guarantee. Well, that's a good deal.
Yeah.
You should make it double the money-back guarantee. Maybe
I'll do that for you, Larry.
Yeah.
This week only. If they call up and say, Larry sent me, I'll do that. Okay.
That sounds fair enough.
So here's how you get a hold of me. I'm in sunny Florida, beautiful Florida. You can call me on the landline there, 239-594-3939. That's 239-594-3939, or you can call me on Skype at norm.winski, and so I can talk to all the folks overseas there for free. And let's see, anything else? Oh, my email, if you want to email me, there's my email there on the screen at nwinski, that's NWINSKI, at embark, EMBARQMAIL.com.
Okay, Norm, thanks a lot, my friend, and we'll be looking forward to seeing you on the show again, okay?
Great. Well, thank you very much for having me on, Larry. Everybody have a great day.
Thank you.
Thanks, bye.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and Norm was kind enough to send me the exact time of where this Saturn-Pluto aspect hits, and that's at 10 o'clock, 10:05 Eastern Time on February the 9th. And the reason why I watch these times is this is how I got interested in astrology. When I was at Drexel, a lady came in named Mary Rivers, and of course it was biased because she only bought silver, but she would buy silver and then sell it 2.5 days later, and she was right 19 times in a row. So, and the times that she bought were really close to where silver was turning to the upside, and that was just Moon going into Scorpio. That allowed silver to be bullish at that time. So we'll see what see what's going on. Anyway, this is the one thing that I want to do is to alert you that if we do start to go down, this market has just it's got a chance to really come unglued, folks, because of the fact that we didn't rally nearly as much as we should have. We had a chance yesterday, and maybe we'll get that chance again today, but we were to 1870, we rallied 50 handles, which was 360 points in the Dow, from down 160 to, or down 120 to up 250. And that's 370, sorry, and then it doesn't go anywhere. So it's just beginning to look a little more bearish the way we look at it, and the long-term charts, of course, from a technical basis, look very, very scary. Now, I wanted to post the chart of Tesla, but I'm not able to do that because Tesla completed a big ABC down here at the 170 level. In fact, they were almost pronouncing Tesla dead today on CNBC. That's how bad it was. So this is what's going on, with some of these markets. Even one of the greatest stocks in the world and the greatest companies in the world is Amazon, and look at it. It's just really. It's really amazing, how the things work out here, because you got to buy them when they're crying and sell them when they're yelling. So we have some important support here in both of these stocks, Amazon and Tesla. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.